I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
John, in the trade war, the U.S. increased tariffs on Chinese goods from 10% to 25% last Friday. And today, Donald Trump is telling us that if China retaliates, it'll be even worse. What's happening with this trade war?
Well, China did retaliate. They raised tariffs on U.S. goods this morning. So, this is how negotiations work. You have to walk away from the table a couple of times, and you have to call each other names, and then at the end you settle down and do a deal. Now, Trump has a tremendous amount of capital to work with, though, because stocks are at record levels in the U.S. His approval rating is creeping up, and the labor markets are so tight here that they're more worried about inflation than they are about any kind of a recession or anything. So he can take some hits from this trade negotiation that maybe he thinks China cannot take. And so this is a form of hardball in negotiating here, where he's willing to cause some turmoil in the financial markets, cause a bit of a slowdown in the U.S. economy, on the assumption that it'll get him a better deal heading into the 2020 elections. So I think that's the strategy right now. And so far, so good from the point of view of Trump, because China can't really afford a equities bear market and a lot of layoffs and a slow-growing economy, or even a recession, God forbid, from their point of view. Whereas the U.S. maybe can, because the timing is not bad. We could go through a few tough months here and then start recovering from them and then be back in good shape towards the end of next year. And that would be perfect from the point of view of the Republicans holding power in the U.S. So it's completely possible that that is the operating strategy for the current trade war. And in the meantime, people who were betting on equities going up from here, despite the fact that they're at record levels, are feeling kind of sick today, or actually in the last couple of weeks, really, because stocks have been moving down in a choppy fashion for a little while now, and today they're tanking. I think the Dow is down, let me see, 600 and some points.
649 as we speak.
At the moment.
Yeah.
And that's a pretty big down day, and it's scaring everybody, and tech stocks are tanking. So we'll see where it goes from here, but it's playing out kind of as you would expect for a high-level negotiation with very high stakes.
Now, Gerald Celente from the Trends Journal, when I asked him about the trade war, he wasn't concerned about it and thought equities would go higher because the amount of the GDP that's involved here is minuscule in real terms. So he said there's no reason for it to really bring the stock market down. It might have some bumps, but it's probably going to continue to be positive.
Well, people have been assuming that the trade negotiations with China would get settled, and that we would have this massive pop in stock prices on that day, this massive relief rally. And so they were willing to put up with choppy trading and a slight drop in the short run. But today, I think, spooked some people and might change the tone of the market. So that's the big risk out there, is that these trade negotiations have a psychological impact. I agree that it's not that big a deal in terms of dollars, although it's a big deal in political terms because the people who are being hurt are really being hurt in the U.S. For instance, our farmers are suffering big time from Chinese restrictions on, for instance, soybean imports into their country, stuff like that. There are issues beyond just the GDP numbers that are really important for the people who are running the negotiations and who are trying to get reelected next time around. So it's not that it's not important, and because stocks, when they're at all-time high levels, are basically a psychological construct. In other words, based on fundamentals, the market could be 40% lower and still be healthy. But it's where it is now because we expect perfection going forward in all the things that affect corporate profits. And you take away any one of those things. You threaten corporate profit growth with slightly higher interest rates, and that happened last year, and we saw what happened towards the end of the year. We had a instant bear market. Or you threaten corporate profits with a contraction in global trade, and that can have the same psychological impact, even if the actual numerical impact on corporate profits is not gigantic. It's a psychological thing now, which I think you can expand to all of the fiat currency world. We only hold these currencies and consider them to be valuable because we trust the people running these currencies to do a good job. If it appears that they're not doing quite as good a job anymore, then the value of these currencies can go to their intrinsic value, which is zero, in no time at all. So they have to be very careful about that. So this is a world that's very interconnected and very over-leveraged, which means one mistake in one place can metastasize into the other places that matter financially in no time at all, and we have to be very careful about that, which is basically just the story of debt. The more you borrow, the more careful you have to be because the risks grow exponentially as your debt increases.
We'll have more with John Rubino right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Rubino. John, they just did a survey, and more young Canadian adults are considering dumping their cars and perhaps using ride-sharing or just transit. Is it because it's just too expensive for millennials, or does the romance of the road coupled with high gasoline prices kind of dampened the whole thing for automobiles?
It's more of a technological thing. I've noticed that with my kids, where they don't even set up the voicemail options on their cell phones because they don't use voicemail. They don't leave each other messages. They just text when they need to connect. And I've also noticed that a lot of my friends are complaining about their young kids not wanting driver's licenses anymore. You know, you hear this, oh man, when I was 16, I went out and got my driver's license on that day, and I was driving ever since. And my kid is 17 and a half, and he doesn't even want to get his license, and he doesn't want a car. I don't know what to make of it. And that is a technological thing, because kids don't perceive a car as being the key to social success that we did when we grew up, because they don't travel to visit each other that often. They do most of their socializing online from their bedrooms or from the family room or whatever. They don't have to travel. And so a car just seems like this big hassle where you have to learn how to do this stuff and take all the risk of driving in traffic, which seems terrifying. And why bother when there's not that big of a benefit attached to it? And now with ride sharing, people who live in any kind of a city, anything big enough for Uber or Lyft, you really don't need if you're not going to drive that much in the first place, you don't need to actually own a car and park it and maintain it and put gas in it and not wreck it and pay insurance on it. You don't have to do any of that stuff. You just call up Uber, and they take you where you need to go. And in the aggregate, it's cheaper because you don't really travel that much because you're mostly online with your friends. So that's a trend that's going to continue. If today's kids don't want cars, or let's say 40% of today's kids don't want cars, then 70% of their kids won't want cars. And we'll reach a point where owning a car is seen as kind of either a work necessity or an affectation, because you really don't need one anymore. You can get one within minutes that will take you someplace, drop you off, and then go away, and you never have to think about it again. And that's so much simpler when you think about it than, well, we have 4 cars in my family that I'm responsible for, so I can really sympathize with somebody coming up and not wanting a car, because 4 cars is basically a continuous battle. There's always something that needs to be managed with them. So not having one would be nice. So I get it. And there are lots of technological trends that are leading people to no longer need things they once needed. And grocery deliveries is another part of this, because if you live in an apartment in a city, you not only don't have to go to the grocery store, but you don't really even have to think about the grocery store. You just text an order, and somebody picks the stuff out and brings it to you, or brings you a restaurant meal. You don't have to drive to a restaurant anymore. So, all of this stuff is combining to make it way more attractive just to stay home. I don't know whether that's a good thing or a bad thing. And
well, in Seattle, they thought with all the young people coming in to work in the high-tech industry there that all these bars and restaurants would be booming, and they're empty. They're just, like you said, they stay home in front of their computer screen and just text their food and drink in.
Well, and plus you don't need to go to a bar if you've got Tinder or something like that. These hookup apps are also a big deal here, because you don't need to go out into a crowd and try to be charismatic with a stranger when you can just, basically each of you decide if you want to meet and then just go somewhere and meet, or show up at each other's apartment or whatever. You don't have to be in crowds anymore. And if you don't have to, it's more likely that you'll find the whole crowd thing distasteful. So yeah, that's a problem for bars and restaurants. Of course, restaurants are making it up in delivery services, and and they're saving money on wait staff and space and stuff like that. So for the best run restaurants, these delivery services are a blessing, because if you could seat 50 people, and that's your limit, there is no limit to how many people you can deliver to. So if you're a hot restaurant, you could do 4, 5, 10 times the business that you can do in a physical space. So it's sort of e-commerce, right? It's sort of like Amazon being able to sell so much more than any store chain can, because they're just delivering stuff from warehouses. So I think the day is coming when a restaurant is mostly a big industrial kitchen with a few tables out front, but mostly a delivery service that takes meals to people.
Well, that is actually the case in Vancouver, where there are virtual restaurants where they're just a website and all of their food is prepared at a central kitchen. A real restaurant that has chairs and seats and so on, but if you tried to find these restaurants, you can't. They only exist online. Some of them look very pretty on their website. Nice views.
It makes complete sense. It's way more efficient to do it that way, and way more scalable. A physical store is very hard to scale, because the bigger it gets, the harder it is to run. But a delivery operation with a kitchen is easy to scale. You just add some stoves and add 3 or 4 more chefs down there, and they're turning out the same stuff according to the same recipes and handing it to people who pop it in the car and take it somewhere. So yeah, it's an interesting transition in a lot of ways. makes it a lot easier to live in a city, but also, well, not even more lonely with online dating and hookup apps and things like that. You actually, potentially, if you want to, can have a lot more varied social life than you could if you were just living in a cheap apartment somewhere in a city by yourself. That can be an incredibly lonely life. And there's no reason for it to be that way now when you've got all these online apps that allow you to meet people, et cetera, et cetera.
We'll have more with John Rubino right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with John Rubino. John, there's a controversial ad series on right now where a company is urging you to get rid of your old, heavy dinosaur gold and trade it in for light, airy, super transportable Bitcoin. Now, of course, what are the plus and minuses of trading in all your gold for Bitcoin?
Well, the whole Bitcoin versus gold thing is very interesting because on the surface, Bitcoin looks like one of those new inventions that we just got done talking about in the previous segment that make the old thing obsolete. But they're not the same thing at all. And I don't understand the price movements of cryptocurrencies, so I can't speak to that at all. Why Bitcoin went from basically $0 to $15,000 and then down to $3,000 and now it's back up to $8,000. I have no idea why that happens. And I think the cryptocurrencies have potential uses in the world. I think they could possibly be part of the global monetary system in a notable way in the future. But they aren't physical money. And gold and silver, though they have issues with portability and stuff like that, are physical and immutable. And because of that, they will form the basis of the future monetary system. Now, it could be that we have gold-linked cryptocurrencies as the transaction mechanism and gold and silver as the saving vehicle, in other words, as the store of wealth in a future hybrid monetary system, and I think that would be cool. We have to work that out. The market has to figure out what works and what doesn't. But something like that is very easy to envision, and I think possibly something that has staying power, because if the basis of your money is something like gold and silver that exists in a limited supply and cannot be created out of thin air by a technologist or a central banker, then you've got sound money and low inflation. And that's really the prerequisite for a fully functioning capitalist system. You gotta have sound money. You gotta be able to say, all right, if this factory generates X amount of cash flow 10 years from now, will that cash flow be worth the same as that much cash flow today? It needs to be that way or else I'm not going to build the factory. So sound money, in other words, a zero inflation world, allows you as an entrepreneur to make that kind of calculation with a degree of certainty, or at least high probability. Whereas an inflationary world is so uncertain that it really raises the risk level of any kind of long-term commitment of capital, because you really don't know what those dollars are going to be worth in the future. In today's world, for instance, if you're building a factory, you don't know whether those dollars are going to depreciate by 5% a year or 10% a year or 20% a year by the time you get them. So you have a huge amount of uncertainty, and in inflationary environments, factories just don't get built because people don't want to deal with that uncertainty. So, a future world in which gold is the basis of the whole thing, of the monetary system, and electronic funds transfer is the super efficient way that we spend that basic money, I think that would be good. So we'll just have to see how we can make it happen and deal with the hacking issues and the government regulatory issues and things like that are going to crop up along the way.
Well, May 7th, China officially banned the mining of cryptocurrency, but as someone pointed out, will they enforce that law?
Well, yeah, see, that's the thing. Governments are threatened by the rise of private sector money that breaks their monopoly, because the ability to define something as money and then create as much of it as you want to is the ultimate power for a government. Nobody's going to give that up without a fight. So the transition from here to that other monetary system I was talking about is going to involve a lot of governments saying, no, you can't do that. Ours is the only money, and you can't buy stuff with this other money, and you can't create this other money, and et cetera, et cetera. You know, they're going to try to stop it, or they're going to try to co-opt it. And there's no way to know now what the final shape of that process will produce or will be. We can hope it's something that is sustainable and results in sound money and limitations on government spending and borrowing. We can hope that, but we don't know for sure. So we just have to see how it plays out.
Sure, and Bitcoin as a currency, it can take 20 minutes, an hour for the transaction to go through. And even in the time of that purchase, it may not be worth what it was when you bought that item, and the merchant or the retailer is out that money, that equivalent. Or they can make a lot of money while you're waiting.
Well, the transaction process, when we get to that next generation monetary system, has to be super efficient. So it has to be very fast and very secure. And that's a technological challenge that we haven't yet conquered. But I think the engineering part of this is the doable part. And the tricky part is the political part, and to a lesser extent, the general financial part. Because we have to figure out what is the best way to do this. And then we have to sell it to governments who don't want to give up any power. That's going to be very difficult. But the technical side of, for instance, speeding up transaction times with Bitcoin, or preventing the really obvious kinds of hacking, stuff like that can be done. And it's just a question of whether governments allow it and accept the resulting system. That we can't know. But I think that... and the other thing we can't know is which cryptocurrency is going to end up being the best, because there are 1,000 of them out there right now, and Bitcoin is a piece of technology. That's something people have to understand, which means it can be superseded by better technology. Right now it dominates the crypto market. But go back through corporate history and see who was dominant in one decade, and if they were still dominant in the following decade. In a lot of cases, the answer is no, because some new technology came along that did that thing better. And there's always that risk with cryptos. And because of that, you can't look at them as stores of value as you do with gold and silver. They've been around, the precious metals have been around for 3,000 years and have pretty much held their value during that entire time. The one stat that gets tossed around that I think is really telling is that during the Roman Empire, 2,500 years ago, an ounce of gold bought a pretty nice man's toga. And today, an ounce of gold will buy you a pretty good guy's suit. So that it's held its value through wars and revolutions and economic disasters and natural disasters, et cetera, et cetera. You know, all kinds of things have happened. And through it all, gold and silver have pretty much maintained their value. Now, we can't say that about cryptocurrencies because we don't know if some insanely great new crypto is going to come along. And due to the existing cryptocurrencies, what smartphones did to flip phones, or something like that, or what digital photography did to film photography. So as a transaction mechanism, I love the concept of cryptocurrencies, and as a store of value, I'm very wary of them.
And, of course, what if a superpower in Asia decided to hack into your power system and turn it off? How much wealth would you have?
Well, yeah, that's a big part of the story. Because, yes, if there's no internet, there's no cryptocurrency. Not much you can do with it if it's in a wallet in the cloud, and then you can't access the cloud. So, all of these things have to be considered, and the beauty of markets is that markets work this stuff out. You know, they try lots of different things and find out what doesn't work and what does work, and they combine the stuff that does work, and they improve on the package, and you get something that improves year after year. You know, markets are great that way, and they'll do that with money if they're allowed to. And the ultimate goal will be a system that is so much better than this, because the current system is crashing and burning. As you and I talk about every 2 weeks, Jim, we are borrowing way too much money because we're able to, and that mountain of debt is going to destroy the financial system as we know it at some point. And it could be coming soon. Stocks are tanking today. I don't know if it's just the psychological effect of the trade war or if it's something bigger happening, but there will be a time when something bigger does happen and this financial system doesn't work anymore. And it's because we have fiat currencies that allow us to borrow insane amounts of money. So this system will break down, it'll be discredited, and it'll be replaced by something hopefully better.
John, thank you so much for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for John or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.